Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets on the Friday, the 12th of February 2016. Okay, this video is always brought to you courtesy of CFDs.com. Be sure to visit the website www.cfds.com for your trading needs and certainly apply for that potential very generous opening cash bonus. Alternatively, you can visit the website www.cfds.education to certainly learn more with regards to my video analysis and charts on a daily basis. Okay, now let's try and decipher exactly what's happening here. Chronologically, Asian markets butchered overnight again. You had the Nikkei down by almost 5%, the Hang Seng down by almost in excess of 1%, and certainly a risk-off tone there all in all. Now, European markets certainly have bounced back today with several European banks certainly finding support. If I look at the FTSE 100 banking sector, you can see on the 60-minute chart there a bullish engulfing candle, and certainly an attempt to certainly claw back a lot of the losses that have ensued. Now, you certainly are seeing a potential low and a potential bottom on the banking sector, which in turn has helped the actual FTSE itself. Now, I didn't expect the rebound to be that impressive, although it certainly has defied my expectations, and it certainly stopped me out on the FTSE this morning. Now, in terms of my trading itself, now, so certainly minus 40 on the FTSE this morning, with regards to the actual FTSE short position that I had. So very impressive thrust higher. Now, Deutsche Bank certainly has put in a potential bottom as well, so the banking sector certainly is looking at a potential reversal. The S&P European Financials, same scenario here again. Okay, so again, something that we need to observe and keep an eye out for. Any retrace now on the banking sector, my opinion now will certainly be a potential buying opportunity, and will be a position. Once I get out of my shorts, I'll certainly be looking to potentially go long. Okay. In terms of the USD, well, Deutsche Bank, before we move on, Deutsche Bank is still at that monthly pivot support low. Daily chart certainly has put in a bullish engulfing candle now. 60-minute chart, you are into that resistance zone. So from my perspective, you are looking at a potential double bottom going in here. You are looking at a classical inverted head and shoulders pattern, folks. Your head is your double bottom. You're looking for a potential retrace now. Any retrace should be bought from my perspective, and certainly looking for a move higher. And that in and of itself, basically confirms a pivot low in European indices. Very simple way of understanding it. Okay. 10-minute chart, we are now into potential resistance now. You are looking at a potential pullback, especially given the fact that Asian markets were down overnight. So you are expected to see weakness here now on the European session. Any pullback again will be, you have gap fill support in this region here. So again, that will be a support zone at 13.8 or £13.80. Any pullback will, like I said, is looking to potentially be bought. Okay, that's my understanding and interpretation of the bias in this market at present. Okay, now looking at the news flow, let's look at the news flow. Economic news flow this morning overall has been more or less in line, potentially weaker. You had the wholesale price index certainly lower. Consumer CPI came in line. Gross GDP came in at 2.1%, 0.3% quarter on quarter for Germany. That came in more or less in line. On a yearly basis, it was weaker. Non-farm payrolls in France certainly came in line again. Although you did have weaker Italian GDP. GDP in the Eurozone more or less in line. The gross domestic product certainly came in weaker year on year on a Q4 basis. Bear that in mind in the Eurozone itself, or should we say Greece. Now, industrial production certainly came out weaker out of the European session. We have US retail sales, so that's certainly something to look forward to, and that will dictate the potential next move in this market at present. Okay, so US data will dictate the next move. From my perspective, given the Asian markets are down overnight, you are looking at a potential retrace based on this banking sector being into resistance. Any retrace will need to be bought, from my opinion. Okay, right. In terms of looking at the technical picture now, the Euro Stoxx certainly it remains an inside bar, and certainly from a daily chart perspective, you still remain weak. A weekly chart, you are looking at potential support in this zone at present. Whether or not we can hold is another question. 60-minute chart at present, still lower lows, lower highs, so certainly you can't one can't get excited with regards to this potential rebound that we're currently witnessing at present. 10-minute chart, you certainly seem to be exhausted. There is an unfilled gap at 2680, so certainly remain open-minded with a potential gap being filled. Again, any pullback on the European indices from my perspective is certainly a buying opportunity. Weekly chart, certainly Euro S&P 350 is into support. The German DAX on the weekly chart certainly remains into support. Daily chart, you're still hugging that lower trend line. Again, it certainly is. It's broken out of that previous red candle, but again, it's a meager. It's not a convincing move. Let's say that. You are at that upper channel of resistance now on the German DAX. You do have an unfilled gap at the 9,000 level. Again, that certainly needs a catalyst. Now, with Asian markets down overnight, that certainly isn't one. Okay. Again, US data it could be a potential catalyst if the data is stronger. Okay. If the data is stronger, that should help the USD JPY trade, force the euro lower, and that in itself could send the US equities higher, which in turn forces European indices higher as well. Again, that is very hypothetical, so let's see what the market will do. Now, from my perspective, you are into resistance at this juncture. You have this rising contracting wedge type pattern, and you are looking to potentially break down. Any breakdown will be a buying opportunity. That's my understanding. So I'm currently short, and I am talking my book, so certainly take that into consideration. That's my bias at present, looking for a pullback. Any pullback will be a buying opportunity. Okay, that's my interpretation, especially with Asian markets down overnight. Okay, now looking at the CAC itself, let's bring up the French CAC. The French CAC still remains weak. It's an inside bar, although you are hugging that lower trend line, the daily chart. 60-minute chart of the French CAC, let's bring that up. Again, it still remains weak. You're currently just hugging that previous resistance or previous support equals resistance. It's not exactly a healthy sign. The 10-minute chart certainly has failed to get past the 3960 level, with the unfilled gap below at 3900. Again, any pullback will be a buying opportunity. Just need to stress this fact. Okay, so I'm currently short. Any pullback will be a buying opportunity from my understanding and my analysis. Okay, although you do have an argument here for a potential IHS, but it's certainly weak at present. Again, 3900, that gap needs to close with the Asian markets down overnight before we even attempt to mount a rally. Okay, all right, the FTSE 100 still inside bar, previous support equals resistance, so into that resistance zone. Technical picture perfect. 60-minute chart, it certainly is. It looks like a bear flag, so we're just consolidating for the potential next move lower. So although oil certainly has been given a lift overnight with the OPEC news, but whether or not that can withstand and last is a different question altogether. Okay, so 60-minute chart certainly is a resistance zone until we get past that key 5640 level. 10-minute chart, you're still hugging that resistance zone. You're into the 200 MA, you're into that fib 61 to 75%. Previous support equals resistance, and therefore you're looking for a potential move lower on the FTSE 100 index. Okay, let's bring up a chart of oil whilst we're at it. Although gold certainly seems to be topping out here on the weekly chart, and even on the daily chart certainly is topping out at this zone. Again, it could be an early indication of potential risk being embraced, but again, it's certainly open to multiple interpretation. Oil certainly is even with the OPEC news, it's not exactly overtly bullish. I mean, we're still stuck at this 27 handle, so we can't, still failing to get past that $27 level, so it's not exactly overtly bullish, and Brent certainly remains weak regardless. I mean, even with the news with regards to OPEC potentially coming together, it certainly isn't pushing this market higher. So, again, certainly a cause for concern. USD JPY. Okay, talk of intervention, etc., helping the indices today. Even with the Nikkei down 5%, the European indices have totally ignored that altogether, which is a worrying sign. You shouldn't really be ignoring the weakness in the Asian markets, which generally means that it's not priced in yet. So when the US markets come on board, the European markets are set to fall to price that potential weakness abroad. Okay, so looking at the USD JPY, certainly into resistance, and therefore you're looking at risk off scenario. Euro USD, you're into a potential support zone on Euro USD. Now, if the US data comes in weak, then obviously that will send the dollar lower, which in turn will send the Euro USD higher and send the USD JPY lower, and therefore you're looking at a risk off scenario. Okay, so remember, it's all about the dollar. If you have stronger dollar data, that will help the USD JPY trade, which in turn helps risk, and vice versa, because the whole philosophy. The whole philosophy is the fact that you want the euro lower and you want the yen lower as well in order for global markets to rally. The euro is into support, therefore you are looking at a risk-off scenario. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs and certainly take advantage of that offers, folks. Okay, goodbye now.